Well, I hope you guys liked the Roaring Twenties. Cue the fire. Welcome to the Great Depression Part 2. With about 1 million people pop the confetti about to lose their jobs. He didn't want those jobs anyway. Bravo, no, cite your sources. I can't believe that. Just seems a little, the Fed's war. Okay, could cost the economy 1 million jobs. And then some more. Oh, and how about everyone getting ready for that disaster, complete collapse behind the Bank of England? What are you guys doing? I'll go over that in just a second. Billions in margin calls. Death spiraling into a complete bond market collapse. Hey, how about those pension funds? And how about your stock market? And how about everything? How about the banking system? Hold on, it's been a while.
Go on, Stanley.
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the
Don't
years.
do it, Stanley.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
It's all gone. Sorry.
What?
It's gone. It's all gone.
Wait, you mean the system lied to me? Yep. Sorry, kid, go home. You're all broke. Go. Bank of England intervenes in UK bond market to stem the rout. And as if we haven't seen this play out before, we know exactly how it plays out. Fed go burr, the Bank of England said on Wednesday, that would be today, that it would buy as many long-dated government bonds as needed because we have risks and we have we're going to bring back that financial stability. And the BOE said it had no choice but to intervene. It's just like our Fed. Look at that. They will have no choice. And, hey, look at that trade that I made. Boop, boop. The Treasury said, you just have to wait for things to break. Things are beginning to break. Oh, they're going to really break. The Treasury said it would, indemnify or reimburse or compensate the operations. And then because of what? Dysfunction. Oh, and it's going to continue to worsen. Yeah, and they're going to make it stable again. Just like that, you're going to see bonds as bad to bonds as good because the government will make sure that you buy them. Epic bond collapse is met by a growing chorus. It's time to buy. So let me get this right, Bank of England. You just cut taxes. You probably shouldn't be. Well, I mean, you should. I don't really like taxes. So if you're like, you want to do away with them, I'm okay with that. Number 2, you increase spending because I know you got to keep the people in power because they're like, okay, we'll give you all these goodies. Just vote for me and we'll give you lots of money. Oh, and by the way, if you ever want to destroy a system, just follow the government's lead. They're doing a great job on it. So cut taxes, increase spending, dumb. That's like bass backwards. They're buying the long end of the bond market with your money. With your money. That's how the whole system works. And then the little bit of control that they have is at the front end. That's it. And that's really not even much to do anything. And if you're confused about all of this, you should probably subscribe to my channel because I go over it all the time. And since you're here, I might as well explain it to you. And everything that I'm about to tell you is the complete opposite of what you've learned in school. Shocker, right? But I'm actually thinking they're doing all of this. They're doing it all wrong, okay? Well, they're doing it right if you want to totally collapse the system, which I'll get to that in a second, because there's a rhyme to their reason. Let me just explain the bond market, which is bigger than the stock market, probably 3 or 4 times bigger. It's huge. And then the derivatives market, which is in the quadrillions. Try to count to that one. But basically what is happening is if you won't buy bonds, QE will force you to. Now, they write down on a sheet of paper, the government, they're like, bond, $1,000. Anyone want to buy this bond? The Fed does not buy the bond. I know people say Fed go burr, Fed buy bonds. they actually don't. I don't have a dog in this fight, so if you disagree with that because college taught you different, that's okay, because I was a professor at a college. I was the jerk that would assign you $200 textbooks, and they told me I had to give you 3 of them. And I'm like, can we do the one that's like last year that's $1 on eBay? They're like, nope, it needs to be the revised edition. I'm like, but they just changed one word. And they're like, yeah, but there's some kickbacks. But anywho, I digress. They write a sheet of paper that says bond on it. Who buys it? You do. Hold on. Your bank buys it with your money. You're like, they can't do that. They actually do. They do 3 things. Primarily, they buy bonds, mortgage-backed securities, or they loan it. And right now at 7% interest, they're not doing any loans. So that's going to totally wipe out the housing market, which actually some of you are actually you're refinancing your house at 7%. You want to know why? That's because you just drained your savings account, you maxed out your credit cards, and the ship is going under. Here, let me throw you a life preserver. You got it? Here. Take it, put it on. Actually, that saves me if you can hit the like button. Much appreciated. But back to the bonds. Okay, so now your banks use your money in your accounts to buy the bonds. And the banks are like, what do we do with this? Then the Fed steps in and says, hey, we're going to create a Chuck E. Cheese token that they call a reserve. And they swap that bond onto their balance sheet, which currently is rolling off right now over here in America. And actually, by doing that process, it actually moves people into the bond market. They're like, oh, well, if the Fed's buying the bonds, we'll buy them too. If you're like, that just sounds like a gigantic dumpster fire. Yeah, it is. Actually, wait until you find out where money comes from. Then it's even worse. But this dumpster fire actually caught a little, the brush on fire that's connected to about a million miles of more brush with houses connected to it. Me on this channel, I'm like, that's a dumpster fire. But do you see all that brush? People are like, oh, it'll be fine. It's okay, Bravo. You don't know what you're talking about. And then I say, well, I'm going to move as far away from that brush as I can because this thing's going to just destroy everyone. And also for some of you in the comment section, thank you for joining the channel. I see I have a lot of new people because you say really mean things to me and you hurt my feelings. But I get it because I'm sure the first time you see me, you're like, what the frack is this guy? What's wrong with his hair? Does he think he's funny? Why is he talking that way? But the truth is, I'm kind of like chlamydia or Mexican food. It's real hot, spicy, right? You're like, ooh, first time you do it, you're like, this is terrible. Oh, wait, I kind of like that spice. So thank you for all my new subscribers. I think I got out of the penalty box or something. I had a video that cleared over 100,000. If I could pat myself on the back, I would. Really small arms. But yesterday you were like, you said the market was gonna go up today. Oh, sorry, I missed it by a day. Guys, come on. When you pull a rubber band down, okay, I have indicators that'll show you. It's just I can't get it on the exact day. I can get pretty damn close. Russell up over 3% today. The other indices up over 2%. How much, Bravo? Probably 5% bounce. And how did I know that it was gonna bounce? Because of my 9 count right there. You see my blue line? It's all technical. Oh, sorry if I missed it by a few hours. And the RSI. I'm like, look, see that? You can't go down that low. That's it. And also, which I'm going to show you in a second, everyone's on the other side of the teeter-totter. If these shorts have to cover, oh my gosh, I don't want to be you. So right there, the beginning of December, January, see that? It bounces. That's what it does. And now how high will it go? And now this is what I'm kind of concerned about, is this one and that one, Jim Cramer, and they're going to be like, that's the bottom. The bottom's in. Because those hopium pills are like a real thing that people take. And it's all those, the traders, the new traders. They're like, this is it. I finally learned. And actually looking at your RSI here, see, there, you got to go all the way back to 2020 to see it at those levels. So it's just, that's how it works. I mean, look at the last 9 count, right? Dang, I can't get my finger in it. Right there, you see? It's sold off. Now, if you keep pulling it back, it's gonna go up higher. So that's probably about 5%. I know this because I could measure with my eyes from, can I? Let's see how close I got. From the bottom to the top, boom, there it is, 5%. There is a probability. Now I gotta be exact with my words. You have a probability, Scott, that you are going to go up 5%, which that 5% is great, but you got to be careful. In a bear market, these bear market gaps, see that gap? It'll gap down. Now, that's why I created first. This could be, looks like a swing trade, right? I'm very uncomfortable swing trading a bear market. Kind of. My new course, they teach you how to swing trade to the downside, but also use a technical, deep TA. What's a bear flag? Or what's a head and shoulders? Like things like that. You got to combo it like this. The trade on this one, also bear market 4-hour good. You got to kind of tighten it up because it's quick movement. On this last one, see the red Bravo 9? Oh, one candle closed. Now I have to speak below. Look, right on that 200. And we drop down all the way to 10%. Yay! Probably hard for a lot of your eyes. You're like, wait, it's opposite day. Yes, it's now opposite day. On my bear market money course, the codes, I put in codes, they last for about 30 minutes. So if it's gone, right? Because I know a lot of you guys are paying $1,000. Stop, please don't. Just wait. Turn on your bell notifications. You don't have to if you don't want to. It doesn't. I get it. I wouldn't want me annoying me either. But the minute the video is posted, you just snag it. And the reason why I do that is I have to have just small. I can't handle like 2,000 people email me like you spelled bear wrong, right? I'll take 2. But if you click on it and you're like, oh, enroll for 1,000, you missed it. And I'm trying to get out 1 video every single day. So if our 3 videos, length, I'm going to show you the length today. And yesterday was the 21. You want to know what the 21 is? Okay, I'll show you. It's basically what I turn on to confirm a bear market. Just like this. Look, head and shoulders. See, left shoulder, right shoulder, head. Oh, okay. Measure that down, okay? Found support. Got rejected. Kiss of death. We're going lower. This one popped right out of it. Just tapped it. Long story. But anyways, we're going to get rejected again. That is on the monthly. I can go all the way back and back. See how it just boop right off of it. This one, no, same thing. Kiss of death and goodbye. It's gone. Same thing with this one. Y2K. See, we go up. The bull market, bear market. We come up, we fall down, we kiss it, and what happens? Bye-bye, 50%. Or 40, on that line, it's 46.47. And also for the trolls that say, oh, you could get all this for free. I say, good. Go ahead. Good luck. And the reason why I have to create a course is because I can't keep repeating myself. It's like, here's everything that is in my brain. So it goes in your brain, and I don't ever have to talk about the 21 exponential moving average on the monthly, which is different than the SMA. Okay, simple moving average. It's all different, but I don't want to go over it And also, my prayers to all of my friends in Florida. Stay safe, which you'll rarely hear me say that. I say stay free. Wall Street strategists hunt for good omens on U.S. stock slide. Sorry, there's nothing good except for retail traders. Hey, retail, you're on the wrong side again. Well, I mean, kind of. Here's what's going to happen. You guys are all going to say the market's going to zero, short, put options, like everyone. Look. Retail trader, buy to open put premiums. You're all betting in the multi-billions that this market is going to go down. You are going to get squeezed and it is going to rip higher. Now, how high, you ask? I don't know. But big picture, we're going lower. So looking at this chart back in 08, 09, here we go. Look, it's way up, it's up there. Look, it's above my hair, which that's the first thing that's ever made it above my head. You don't want to mess with the Bravo hair. Look at that. Look, see? Normal, rip your face off, not normal. So when I say, you know, it's going to rocket, when those, yeah, just trust me. I mean, if for some reason they start slowly sliding down the other side of the teeter-totter, go towards the middle, kids. So with all these bad things going on, everything from, oh, hey, look at those gas pipelines that just blew up together. Huh, wonder who could have done that. It's like a calculated everything. It's all trying to go. I wonder why. What are they trying to control here? Here, listen to this clip and you'll understand.
Appearing here in the United States, we still use cash quite a lot. It is declining, not in absolute terms, but compared to non-cash payments, it's declining. And we're motivated by really what Christine was saying, to look very carefully at the potential costs and benefits of issuing a central bank digital currency here in the United States.
Oh, the benefits? And I've been telling you this forever. They're going to take their balance sheet or create another one. Whatever. It's going to be an entry. And you're going to have a digital wallet, and they'll control everything you do. But bravo. No, they will. You want to buy something? Oh, it's up to them. There has to be a disaster. We'll fix this. Hyperinflation. We got it. We got it covered. Just here, sign on the dotted line. Give us your soul. I'm sorry. Offer up. We would just like your freedom. And all the sheeps will do it. Like I've said before, I watched everyone do something that was just unimaginable, and they're going to do it again because it's the right thing to do. Honestly, I don't have a solution because, well, I mean, I do. Make a whole lot of money, find an island. Run, because it's going to affect your tax. Oh, you wanted your tax return back? Oh, you wanted a pension fund? You wanted Social Security? You wanted to live? That's what is going to happen. And the people will say it's just like it's regular money, right? Okay, we're okay. And how we go from a soft landing to a hard landing, we're going to have a hard landing. It's all going to go. It's all going to be really bad. Even, I wish I had that last name. Drunken Miller. Good job, Stanley. Sees hard landing in 2023 with a possible deeper recession than many expect. How about a recession followed by a depression? And oh, hey, look, we got breaking news. Always on this channel. The stock market's ripping higher. Everyone run into it. You short squeezes, yikes. Just to be accurate, Dow jumped 600 points, rebounding from 2022 lows. Because it's the Bank of England? They always try to find a reason for markets to go up or down. It's the charts. The charts will tell you where they're going every single time, and that's why I can get so damn close. Also, the charts are telling you that in the future, these yield curves and the euro dollar, it is like, you look at from 08, what 08 was, this is going to be worse. This is going to give a 1929, okay? From there, for about 10 years, a run for the money. But you will also have bear market bounces. Take advantage of them. Yellen, she always right on the dot. Yellen says markets functioning well. Conditions not disorderly. Hold on. Let me fix this article from Bloomberg. Quote your sources. Conditions not disorderly yet. Or in 6 months, the article probably looks something like this. Yellen says markets functioning, conditions disorderly. We have to do something about it. Fed go burr. The Fed just hasn't, governments have not held us underwater long enough. Again, I always say, they're like, nope, I still see bubbles. We're going to wait. The bubbles stop yet? No, Stan? Okay. 29%. You guys feel it. You know it. 29% of Americans now drawing from their savings. Looks like it's a rainy day. More than usual. New survey says. Actually, the surveys say that you're broke, depressed, you've maxed out your credit cards. We've never seen credit card ever, or credit card balances look like this since forever. Savings, you had a savings. Now it is gone. I'm just thankful that Yellen she says everything's functioning great. No problems. Just like last time when she said financial crisis unlikely in her lifetime. 6 months later, we go through the 08 collapse, and then you got this clown.
So cash is not disappearing here in the United States. We still use cash quite a lot.
Oh, yeah, we do, until we get rid of that, too. Whatever cash you have or whatever you have, make sure you guys buy the dip, man. These stocks trading back at their lows. You want to see low? I'll show you more lows. And look, the Dow jumped. It's safe. Come back into the waters. The analysts are telling you everything is fine. I mean, don't look at Apple, though. I mean, I know they're not making products anymore. They see what's coming. I mean, who even get the iPhone production? It's the same phone, you guys. They keep making the same phone. They actually couldn't even get rid of the notch at the top. They just made it bigger.